Hey everybody, what's going on? It is James here, and I had a wild urge to do another video today. This video is also going to be about bigger picture stuff, about understanding the world around us financially and economically, and hopefully putting some of these pieces together so that in the future you're better equipped to navigate the markets. So about a year, maybe a year and a half back, I purchased a book, and this book was called SIE Exam Prep 2020 through 2021. And essentially this was a exam book for those that were studying to get their Series 7 license, which is something that I've kind of toyed with, the idea of doing. Series 7 licenses in the United States allow you to trade for other people, basically start hedge funds, things like that. So I was thinking about this today because I see all these articles about the Fed, and the Fed's going to do this and the Fed's going to do that. And I don't think 99% of people even know what the Fed is supposed to do, right? They just see these little sound bites in the media. And I was certainly in that camp. I had no idea what the Fed even was 5 years ago. I mean, I'd heard of it. I'd seen articles once in a great while about it, but it didn't really have any impact on my day-to-day life. At that time, I wasn't a trader or an investor. I was just a business owner. I just paid my bills and saved what I had left and, rinse and repeat. I tended to ignore pretty much everything around me. Politics, economic issues, all that stuff. I just didn't care about any of it. I was very much in my own little world, right? I just felt like I'm going to focus on the things that I can control, and I don't care about anything outside of my control. But when I started studying for the Series 7, that's when I started to realize what a big deal the Fed really is. And it's also why I can say that the Fed over the last 2 years, especially, with COVID and everything else going on, they really, really ran amok. They went way above and beyond what they were supposed to be doing. So I'm just going to read a couple of paragraphs from this book, and then we'll kind of talk about this. So in the beginning of this book, there's basically, it's almost like a glossary, right? For new people. Again, it's a study manual. So there's a term, monetary policy. Again, a term that all of us have heard time and time again, but very few people really know what it means. So monetary policy is an action of the central bank to make full employment, price stability, and stable economic growth a reality. These are defined within the Federal Reserve System's roles. One of the responsibilities the U.S. Congress imposes on the Federal Reserve is ensuring price stability in all areas of the nation's economy. All right, let's stop there. I think we can all agree that that goal has been sorely missed. Are we seeing stable prices in our economy? Gas was under $2 a gallon on average, maybe a little over $2 a gallon around here 2-3 years ago. And we're not going to make this a political issue, right? But a couple of years ago, gas was a couple bucks a gallon here. Now it's $4.49 a gallon here. The national average for gas is right around $5 in the United States. A couple of years ago, it was right around $3 in the United States. I would hardly call a nearly double increase, right, a doubling in price, stable prices. We're seeing people whose groceries bills have went up 30, 40, 50% because of the increased cost to transport goods. We're seeing wages that have completely ran away from where they were a few years ago. Suddenly fast food workers are making $13 to $15 an hour. Now, I'm not saying that's good or bad. I'm simply saying it's very different from where it was a few years ago. I'm actually for paying people better and making, bringing more people out of poverty, but that's a whole other conversation. All right, so let's continue. To achieve this goal, the Federal Reserve manages short-term interest rates and credit cost in the economy. Monetary policy has a direct effect on the short-term interest rates, while the policy has an indirect effect on the long-term interest rates, prices of equities, currency exchange rates, and other assets. The Reserve uses the channel to influence business investment and inflation in the country. Its ability to influence these two major factors that affect the economy has a profound impact on the capital market. We're going to skip ahead a little bit in the book, and we're going to continue talking about monetary policy. And it says, to conduct its monetary policy, the Federal Reserve influences interest rates in the markets and influences how money is supplied in the economy. It influences both interest rates and money supply in a number of ways, through the discount rate, open market operations, interest on reserve balances, and reserve requirements. For instance, the Federal Reserve may set base interest rates and increase money supply to stabilize the economy. If it envisions an inflation rate of 1.5% and believes inflation may rise above that, it may decide to increase interest rates to discourage spending and encourage investment. This will lower aggregate demand and have the same effect on inflation. In the event of a recession, it reserves the right to cut interest rates to normalize the economy. Well, let's go back a few years, and what did the Federal Reserve do? They cut interest rates. But the thing is we weren't in a recession. There was danger of a recession in 2020, but there was no recession. And because the Fed decided to implement these policies well before they were needed, that's what caused the markets all to go parabolic. Somebody made a comment to me recently that they had done very well in the markets. They'd invested in a few things and gotten a pretty good return. And they were a little over the top arrogant about it. And so I had to bring them back down to reality by pointing out that a person could have literally bought lumber. Used lumber, right? Sat it in their garage and made a profit the last 2 years. A person could have bought oil and made a profit. A person could have invested in nearly any decent stock and made a profit. A person could have invested in nearly any decent cryptocurrency and made a profit. A person could have invested in gold or silver and made a profit. A person could have invested in copper and made a profit. A person could have bought used vehicles and for the first time in history made a profit when that used vehicle appreciated in value instead of depreciated in value. So if you're a person who believes that you are really good at trading because you've made money the last couple of years, but you don't understand monetary policy, or you don't understand, technical analysis, or you don't understand fundamental analysis, if you're just kind of guessing and you made money, reality check, you got lucky. I'm not bashing you for getting lucky. I'm not hating on you for getting lucky. I am trying to do you a favor by making you understand you got lucky. And when you win the lottery, the worst thing you can do is take your winnings and go stick it all back into lottery tickets, right? Imagine this is what people in cryptocurrency especially do. Let's say that you went out and bought a lottery ticket. Let's say that you spent $100 in lottery tickets. And let's say that you won $50,000. You got a jackpot. Boom, 50 grand in your pocket. Congratulations. Would you really go back out and put $50,000 into new lottery tickets hoping to turn it into $1 million? I don't think you would. I think you'd take the $50,000, thank your lucky stars, and be grateful for what you got. But in cryptocurrency, somebody will throw 100 or 500 or 1,000 or 10,000 or whatever it is. They'll throw it in the market. It'll go stupid up, parabolic, whatever, just like these last few years. They'll make a bunch of money, and then they'll just leave it in there and write it back down, or they'll cash it out and put it all right back in, hoping to make even more money, right? It's the same reason that a person walks into a casino with maybe $500 in their pocket, gets up 5 or 10 grand, but by the time they go home, they have nothing left. They just keep playing until they go broke. And we are seeing this in cryptocurrency right now. I don't have the article right in front of me, but I posted about it in my Discord earlier. I seen it on the financial news. There is a company, let me find the name of it, Bitfarms, one of the largest Bitcoin miners. Now these apparently were a company that prided themselves on being long-term hodlers. Just one problem. It seems these long-term hodlers have suddenly shifted course and sold 3,000 Bitcoin valued at around $62 million. Unfortunately, 1,000 of those Bitcoin they bought 5 months ago at $43,200 each, meaning they took an over 50% realized loss. and lost over $23 million in that investment. And that, my friends, is exactly what I'm talking about. It's not just Joe Blow sitting in his bedroom trading on his mobile phone, right, from the commode or whatever, that's losing money. It's these big firms that have gotten lucky by being in the right place at the right time but don't know anything about markets. It's the internet marketers who had extra money to spend and threw 10, 50, 100 grand on crypto, turned it into a few million, then used it to grow YouTube channels and Twitter presences and Facebook presences and the whole 9 yards. And now they're telling everybody how, this is the time to buy. This is the time to buy, right? These decisions and these opinions are not based on reality, okay? So let's jump over to a chart, and this is not about Bitcoin specifically, but we'll use Bitcoin as an example. Let's jump over to a chart and take a look at a weekly chart. I don't have any indicators on here except 2 moving averages. Historically, we know that the 19-week moving average tends to be a pretty good line in the sand for Bitcoin. In bear markets, it acts as resistance, and in bull markets, it tends to act as support. We ranged around it up here and then broke below it. We also know that over Bitcoin's history, the 200-week moving average has been a very strong line in the sand. We can see it here. I'll put it on a log chart. Right, we can see that each time it touches it, it ends up presenting a really good buying opportunity. You can see all through here, 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 and now we touch it here. Now, there's a few things. If somebody was saying buy because we touched the 200, at least that would be based in reality. But a lot of people were saying buy back here at 30 grand and 25 grand just because it was quote unquote cheap. But there's a problem with this. I want you to look at what happened in the previous times when it hit this 200 moving average. Touched it, left behind a big tail. Why? Because there was a ton of demand. People excited to buy Bitcoin. Plus, it had already moved down, 80% or so. Really great buying opportunity. Same thing here. Consolidated, you're in a range, you're sitting on top of that moving average, big demand tail. This was absolutely a place that if I was trading in 2015, I would have wanted to get long on Bitcoin. Right through here. Even had tweezer bottoms. Okay. Let's go over to 2018. Again, really great place to buy. Maybe not necessarily right on the 200 because this candle is not all that bullish, right? But when it pinged it, consolidated, put in an ascending triangle, and then started to break out, certainly around $4,000 or so, there was a reason to be getting long on Bitcoin, okay? So, fair enough. March of 2020, we have this huge, massive move down. We drop over 60% in a matter of just a few weeks, and we leave behind this massive demand tail. Not only do we leave behind a massive demand tail, but if you put volume on the chart, you'll actually see capitulation volume here, followed by massive buying volume, right? These were signs that this 200 moving average was likely to hold. Great. Now let's move over to current time. And what we see here is, yes, we have some big volume. It's potentially capitulation volume, but there's one problem. Well, there's multiple problems. The first problem on this chart is we did not bounce off of the 200. We went right through it, and with a convincing close underneath that 200 moving average. There is no big demand tail. There were not a bunch of buyers just waiting, licking their chops, waiting to buy Bitcoin at these levels. No, in fact, there was still more selling than buying happening, which is why there's almost no tail in this candle at all. The other major problem that we have right here is this. Back here, this was a big drop. And then pinged it, 70-80% drop. It was retesting these highs back here, looking pretty good. This was a 78% drop, bear market stuff, typical bear market moves. This was a big drop, had the 60% almost parabolic move down, retesting this breakout back here. But what we have right here, some people say, well, yeah, it's retesting the old highs. Okay, fair enough. But what really happened was we just broke south of our distribution range. We're not breaking, we're not going back in a correction and retesting a breakout in a bull market. We're actually breaking out of a bear market, which means that, yes, it's likely that we will get some kind of bounce, but it's the kickback bounce, the bounce that you get before this happens, just like this was the kickback bounce that you get before this happens. This is accumulation. This is markup. This is distribution. And now we're entering the markdown phase of the market cycle. Markdown phases are normally not 1 or 2 candles long like this. This is just the beginning. And we can go and we can look at Wyckoff logic. We can look at all kinds of different things, but I'm not going to get deep into that today because I just want to keep this fairly simple. I want to talk about the reality is this market did what it did because of the Fed, because of the really crazy monetary policy where they were basically handing out all of the money. They were injecting liquidity into the market. They were refusing to let it crash back here, right? Not necessarily crypto, but the stock market. And so when the stocks were going down, people were trying to sell, and the Fed was like, no, 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 we can't have that, right? And so as they lower interest rates, people start taking out loans and using those loans in many cases to invest. Well, that cheap money is coming to an end. Interest rates are, quite a bit higher than they were a few years ago, quite a bit higher than they were a year ago. Cheap money is, probably gone for a good bit. They've got to do something to try to curb this historic inflation that we're facing, and they can't continue to lower interest rates or drop them back down without creating an even bigger nightmare on the inflation side. And really all this, in my opinion, comes from the Fed simply jumping the gun on this, right? Had they not started all this quantitative easing and going nuts on it back here in 2020, maybe right now they'd have some, ammo left in the chamber that they could fight this with, but I just don't think they do, okay? So you really need to understand the bigger picture of what's happening, because even when I go to social media and even when people have finally flipped bearish, even though they're way late to the party, some people are flipping bearish, but even most of the people who are bearish are still talking like this is just another market cycle in Bitcoin. Like they're going to wait for it to drop. They're going to buy it. It's going to go back up. There's going to be a halving. They're going to get rich. It's going to be a $250,000 Bitcoin, yada, yada, yada. And they're failing to understand that Bitcoin existed in an era of loose monetary policy, if you want to call it that, right? Basically wild and fast, making it where, speculation was running rampant and just no better time for Bitcoin to exist. Well, it's going to take a while to clean up the mess that they created with this 10 or 12 year run of insanity. Okay, all we're seeing the last 12 months is the peak of that insanity. For the last 24 months. It's probably going to take a few years to clean all this up. Maybe, maybe not. But I think people are going to be honestly surprised at how different this plays out versus past cycles. I'm not saying it'll never go back up. I'm not saying it'll never put in a new all-time high. I have my doubts, but that's a different conversation. What I'm saying is this is not like past market cycles. We never had distribution in past market cycles. Okay? These were all blow-off tops, basically. Parabolic moves up with corrections, right? Parabolic move up, correction. Parabolic move up, correction. Parabolic move up, correction. Parabolic move up, distribution. Very different things. Very, very different things. And if this markdown gets really nasty, if we start looking at things like a monthly chart, ooh, right? Let's take all these moving averages off. Now, you seeing the problem on the monthly? This is monthly. Here's your volume. I don't know about you, but I'm not seeing any buying volume. The buying volume stopped way back in January of 2021. Ever since then, it's been distribution. Just big players slowly moving out and distributing their assets for those who are FOMOing in thinking about $100,000, $200,000, $500,000 Bitcoin. All right. It is entirely possible that this markdown phase goes a lot lower than what anybody's thinking. We're not going to talk numbers today, just giving you an idea of why this time is not like the past. All right? Very, very different things. All right? So I'm going to go ahead and wrap the video up there. I just felt like talking about this a little bit. Again, I wanted to do more big picture stuff and kind of get people, introduced at least to some of these bigger concepts, because you can know technical analysis and you can understand charts, you can understand all these things, but if you don't understand the Fed's role in it and how they can manipulate the market, which is not necessarily a bad thing. If you understand it, you can use it to your advantage, right? But if you don't understand how that works, you're kind of trading with a bit of a handicap. All right. So all that being said, I hope you enjoyed the video. Make sure you give it a thumbs up and subscribe to the channel, and make sure you check the description. There will be links down there where you can join my trading courses if you'd like to learn how to trade. And that very same link will take you to a page where you can sign up for my trading indicator if you just like a simple trading view indicator that will give you buy and sell signals on your chart. All right, this is James with Crypto Common Sense, reminding you all that I am just some guy. I'm sitting in a spare bedroom, and that means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Trade safe. I'll talk to you soon.